Welcome. I'm Phil Grandy to my YouTube channel, My Take on the Market. Next few minutes, I'm going to tell you exactly what's going on in the stock market, what you need to know. I'll be telling you the truth. You don't get the truth from the fake business news networks. You'll get the truth here. So let's get started. We had a 42% rally in the last 50 days. That's historic. Never ever in history has the stock market going up so fast. And the other thing that's interesting, without companies making profits. Imagine that. But to understand what's going on, you have to go back to 2008, okay? We're doing the same thing now they did in 2008. In the crash of 2008, they printed money, $65 billion a day. The portion of that money went to buy treasuries to keep driving interest rates down to zero. Because remember, when you buy a bond, the yield interest rate goes down. So they keep on doing that to keep driving the short-term rates down to near zero. The other money, they go in to prop the stock market up. They hand to the 5 largest banks money to go buy individual stocks. $1 trillion in purchase of stocks. The market rallied 80% off the bottom in November 2008. Another $650 billion they printed. Market rallied 33%. $400 billion, 28%. $1 trillion, another 25% rally. That's exactly what they're doing now. If we took and did an overlay, it would look just like this. Same thing. All this injection of money to move the stock market higher. They're doing the same exact thing. Okay, who is the Federal Reserve? The Federal Reserve is controlled by a group of people called the 100th of 1 percentile. Not the top 1%, the 1/100th of 1%. To join that exclusive club, you have to have a net worth of $110 million and income of $18 million a year. If you want to be part of the 1 percentile, then you need a net worth of $11 million with an income of $700,000 a year. This is an elitist group, and their collective mindset, they really truly believe the world can't function unless they, the richest of the rich, get richer. They truly believe they got to set the policies to protect the banks they control under the Federal Reserve, which is a private banking cartel. Since 2008, the banks have never been fixed. That's right. Since 2008, the banks have never been fixed. They've been propped up. Okay, they've been propped up. And nobody wants to admit to that, but that's exactly what's happened. I'm going to show you. Since 2008, when the stock market rallied, what they did is they propped the banks up so the banks can keep lending money to the largest corporations to buy their own shares back. What's that mean? That means that because after the wipeout of the 2008 crash, people's savings, jobs were lost, homes were lost. How could you move stocks up without corporations making money? Well, what they did is they simply went in and they would print this money and they'd give it to the corporations so the CEOs could buy their own shares back. What's that mean? Simply means that if you had 10 million shares and your stock price was $5, okay? So if you got 10 million shares like this, you got 10 million shares and your stock price, okay, is $5. Okay, now earnings seasons come and your earnings are, let's say, 2%. So your earnings is 2%. You got to spread the 2% over 10 million shares for your $5 stock to go up. The problem is earnings have been dropping. So let's say the earnings are 2 million. If you spread it over 10 million shares, that's not enough. You don't have enough earnings to spread. So that means the stock price is going to go down. So the way they avoid that, and they've been doing this for 12 years, called stock buybacks. They print the money, give it to the corporation. So if his earnings at 2%, what he does, he simply buys his stock down from 10 million to 8 million. So now if his earnings are 2%, he can spread them over 8 million shares and the stock price goes up. They've been doing that for 12 years. Well, they have accumulated such debt, okay, the corporations, in doing that and borrowing this money, almost $7 trillion. And they keep telling us that the economic growth we've been having over the past 12 years is to grow the economy. All of this printing of the money, QE, to keep putting, to buy stocks down, stock buybacks, and not only just buy stocks down, but the Fed goes in and they give to the 5 largest banks enough money to go buy individual stocks every day to push the market up. The problem with that, they're telling us they're doing this all for the growth of the economy is going to grow. That's a lie. What has grown, okay, is debt, starting with the corporate debt, borrowing all this money, $7 trillion. Historic household debt. They keep telling everybody the stock market's the economy. So people feel good. They say, well, gee, look at the economy's going up. They think the stock market's the economy. It's not, but they convince people. So now people have confidence. You'll hear consumer confidence is up. Sure, because they're not telling people the truth. The economy's going down. What is the economy? Corporate profits, earnings, and how much we grow each quarter. How many goods do we produce and sell each quarter? Well, they've been going down since 2011. So our economy's been going down while our stock market's going up, but they've convinced people that the stock market is the economy. No, people don't understand this. So they think everything's fine. They think they're going to keep their jobs. They go on and they get more credit. They get into more debt. And now we got such debt between the national debt at $26 trillion, historic household debt $14 trillion, the corporate debt $7 trillion, and we got 42 million people out of work. But the stock market went up. See, how could that happen? It's simple, okay? It's what they call injecting, it's called stock buybacks, and just simply printing and injecting more money into buying stocks. But that kills the economy and it's grown debt. Now we're at a real problem. After 12 years and lies from the Federal Reserve and from Fake Business News Network telling us this has been good, the economy's grown. No, the economy hasn't grown. The economy has shrunk. Okay, all that's grown was stock prices to make the very, very wealthy even more rich than they already were. But the problem is the economy has gotten so full of debt, so bad, so hurt. The other day, they even announced that banks no longer are going to have to set aside money for bad debts. Do you understand what that means when they announce banks no longer have to set aside money for bad debts? It's telling you that's a signal that our financial system is bankrupt. Now, that's going to make the stock market go higher, and it did, because anytime you got bad news, let's say jobs are down, remember the 42 million jobs that were lost? That's good news, because every time we have bad news, that means they're going to print more money to keep moving the stock market up. Because every time you have bad news, the market's supposed to go down, not up. But they've done the opposite. Every time they have bad news, investors come and start buying like hell because they know the Fed's going to print money to push the market up artificially. So everybody looks forward to bad news. Every day they want more bad news. And boy, do we get it. We got terrible bad news. Now we're at a point, however, that the market's going to start consolidating here. We're running out of bullets. We're running out of ammunition. This historic rally, okay, remember, we never seen money injected, $215 billion a day going into the stock market to buy stocks. So now we're going to consolidate. We're going to start seeing what happens in the next month or so. Are we going to now go back and test these lows right here? My guess is yes. Or are they going to come up with more bad news and more printing and destroy the economy even worse? Remember, what no one understands, there'd be a riot if they understood. People would be marching in Washington right now if they understood what was going on. Remember, this quantitative easing, the printing of money to either reduce the amount of stock so companies' stock price can go up, or to buy stocks directly. Remember what happens. Okay, quantitative easing is the biggest threat to our economy, and that's why the economy has gone down in the last 10 years, right here, going down while the stock market goes up. It's a huge threat because the QE is the biggest threat to our economy because of growth. Because see, stock buybacks, all it's doing is transferring money from the company capital investment account, okay, earmarked to increase wages. No longer do wages increase. In other words, all this money that's set aside for capital investment, no longer goes to buying new machinery, to increase productivity, to increase wages, to increase savings, to increase spending, increase businesses, okay, startup businesses. That money that goes to savings used to do all these startup businesses. That's, you go to the bank and borrow money. No more. So this QE has destroyed the economy, okay? And that's what you're seeing right here. Again, this is what you're seeing. We're seeing again, let me get the right chart up here. We're seeing, once again, an economy that is falling apart, okay? An economy that's being destroyed right here, okay? Being destroyed while a very small group of people get rich. And remember, every dot-com crash we had inflation and deflation. Housing, inflation, deflation. And then QE, we were ready to drop again, but they got they're so hooked on quantitative easing, so hooked on driving the stock market without having to have profits. This is called, think about what they're doing, profitability without profits. Stocks are going up without profits. And now they've gotten so used that every time they move the stock market up, every time it pulls back, because it has to correct, because it's going up for the wrong reasons. The Federal Reserve comes in and punches money in. But now we're at a key point. What's going to happen now? Is the market going to continue on its way with all this huge debt? Oh, we didn't grow the economy like they said. We grow the debt. I'd say for the next few weeks, maybe next few months, we're going to go sideways for a while. And then we'll see that if there's no strength to drive the market higher because we have too much debt, we'll correct and we'll make a lot of money selling short when it turns red. If it continues to go up again, okay, even though companies aren't making money, we'll be right there and we'll make money all the way up, just like we did here, all the way up. So that's what is going on. We are being sold a bill of goods. And as I said, QE has been dangerous, destroyed the economy, destroying savings, destroying everything. The only people that are making money are the very, very wealthy. And we got to get on that train. And as a gang member, we've caught the market on the way down shorting. We caught it on the way up. Now we just got to make sure what's going to happen now. What is going to happen now? Okay, and when my color-coded chart is what will give us the signal. If this turns red, that means we're going to roll over and come back down. If it stays green, it means we're going to go higher. Either way, we're going to follow. We'll be in the right direction, and we'll be making money, especially on a severe drop. Remember, we've had this severe drop 2015, 2018, 2020. Each time they come in to push the market up. But the problem, because the banks aren't leading, they can't hold that rally. So it's going to be interesting in the next few weeks what's going to happen. And either way, up or down, using our color-coded chart, we'll be there. We'll make sure we're on the right side of any transaction. Check it out. Join the gang. For 10 days, it's free. Get your color-coded chart, okay, and your membership. See you on the charts. I hope you now better understand how this market is going up without profits. See you on the charts.